Okay, let's see about ADP Non-Farm Employment Change. This is a private data and non-farm employment change is a government data. The difference is the ADP mentioned here. Non-farm employment change is the employment change, that is the total number of employees this month minus the total number of employees the before month. Okay, this was called employment change. Non-farm employment change, it calculates both government and private sector employees. This data was released by the US Bureau of Labor Statistics. It's a government. This ADP is private. This ADP non-farm employment change has been released 2 days before the government data. It's an estimated amount. This is a final amount. Okay. This is a confirmation data. This is only a estimated. ADP is automatic data processing. It's a private company. It manages the HR systems and payroll management systems for the millions of US private companies. Okay, the millions of US private companies means it totally like mentioned here is a 26 million employees salary has been managed, calculated by the ADP. By the salary calculation of the employees, it calculates the number of employees has been hired or lay off this month. The ADP is the employed people during the previous month. Okay. Now let's take the now it's January. Now currently it's February. For an example, now take January. Okay. The January data is the data from the December, the previous month. In the January data has been released make it as example of 10 employees. Totally 10 employees salary has been calculated in December. The data was released in January. In November, the total of 8 employees data has been calculated. The data was shown in December. Okay, let's assume the January has 10 employees data, December has 8 employees data. That is 10 employees receiving salary in January, 8 employees receiving salary in December. Okay, here the difference is 2. That means 2 employees has been hired between these months. Okay, extra 2 employees salary has been calculated by ADP. That is number of employees salary this month minus number of employees salary previous month. By calculating how many employees salary has been calculated by ADP, it will tell the employment change. Here 29k minus 29k has been mentioned in the December month. That means layoff has been happened. Like the December 8 means the November it will be like 11 employees salary calculated in November, but only 8 employees salary calculated in December month. Here 3 employees has been laid off. Okay, it's simple. Let's move on to the next slide. This is a forex factory calendar. Okay, ADP Non-Farm Employment Change. The source, that is the company. ADP Automatic Data Processing. You can see the definition here, excluding the farming industry and the government. I have told we exclude government companies, government employees, and also farming industries. The employees from farming industry, because of monsoon and so on, the data will not be stable. It collapses these data. Okay, so we exclude farming and the ADP exclude the farming and the government employees data. Here this one is important for trading. The actual greater than the forecast. The actual forecast and previous data. Okay, it was released 2 days ahead of government released employment data and so on. You can see, and altogether the ADP analyzes payroll data from more than 26 million workers to derive employment growth estimations. Okay, these are the informations you can see in the forex factory calendar. Here this one is the main. Okay, it was released in 6:45 p.m. in January 7. You have to watch don't want to watch any newses. You can see this calendar only. This will be blank before 6:45 p.m. After the news it will show. From this you can analyze it was greater than the forecast or smaller than the forecast. Here it was smaller than the forecast. It was smaller than the forecast. The forecast is 49k by the analysts, and the actual is 41k. So here what here is mentioned is very important. Usual effect. Actual greater than forecast is good for currency. Here actual lesser than forecast. So it's bad for currency. Bad for currency means that is DXY, the traders, for the traders. Okay. Let us explain this in the another slide. In the data, the jobs are down. The actual is lesser than the forecast. Let's see for the actual greater than the forecast means the jobs are higher. There was hired many people by the private companies. If the job is high, the many people get employment and more people has money in their hand because of the income. Okay, if the most people have money in their hand, their spending power also increases. If they have income, the spending power also increases. They use the amount to buy products. If they buy more products, the demand of the products will also increases. If the demand increases, the company also produces more products because of the supply decrease. Okay, if demand decrease, the supply will be, if the demand is greater than the supply, the company needs to produce more products. If it needs to increase their production, it needs to increase their employees, so it should hire. If it hire more employees, automatically the economy becomes strengthened. The economy strengthened. If the spending power has been raised, a cost of a product which is 100 rupees now will be the same product will cost 110 rupees, like that. If the spending power has been increased the demand has been increased, the supply is low, then the cost of the product will increase. If the cost of the product increases, there will be the inflation risk. Okay, if inflation risk happens, the government will increases the interest rate. Why? Means to control the inflation. If the to delete the excess amount the people having in their hand to pay back their loans and so on. If the interest rate has been raised, the investment in the bond, US bond, and fixed deposit will also rises. People move on to the bonds and fixed deposit. They deposit their money in the bank, and then the USD will be strengthened. People move on from gold to the bond and fixed deposit. So the gold rate will be stalled or decreased. Also, you know about the correlation of the US dollar and the gold. If DXY rises, gold goes down. If DXY goes down, gold moves up or stalled. That is consultation. Okay. If you have any doubts in this, please leave a comment. If you need to explain any detailed about any of these concepts, please tell in the comment. You can see this. I have gained much in Goldpetal futures with the analysis of XAUUSD in the ADP NFP release news, because the data, the actual number is less than the forecast. The actual number is less than the forecast. You have already seen that the actual greater than forecast is good for currency. Okay, if the actual is lesser than the forecast, it's bad for currency. That is DXY. If the DXY goes down, gold rises in XAUUSD. It reflects the Goldpetal. Okay. If you need any other videos, please comment. Thank you.